Hello everyone. Bitcoin is crashing again. And before you panic, celebrate, or tweet something dramatic, let's slow down and actually understand what is going on. This video is for complete beginners. No hype. No fear-mongering. No price predictions pulled out of thin air. Just facts, history, and logic. And yes, this is not financial advice. This is education. If you enjoy calm, honest explanations about money, markets, and investing psychology, make sure you subscribe. It costs nothing, but it helps this channel survive longer than most crypto influencers during a bear market. Now let's start at the very beginning. What even is Bitcoin? Bitcoin is a digital currency created to work without banks, governments, or middlemen. It was designed to allow people to send money directly to each other over the internet. Bitcoin officially started in 2009. It was created by an anonymous person or group called Satoshi Nakamoto. To this day, nobody knows who that is. And yes, that mystery alone has probably added billions to Bitcoin's value. In the early years, Bitcoin was basically worthless. People mined it on laptops. Some bought pizzas with it. Others forgot about it completely. Back then, Bitcoin was not an investment. It was an experiment. Now let's talk about the part that hurts everyone emotionally. Bitcoin prices in the early days. In 2010, Bitcoin was worth less than $1. In 2011, it crossed $1. In 2013, Bitcoin traded roughly between $15 and $100, depending on the time of year. Let that sink in. If you bought one Bitcoin in 2013 for around $20, and you still owned it today, even after the current crash, that one decision would have changed your life. And if you didn't buy it back then, welcome to the club. Almost nobody did. So please stop torturing yourself with what-if math. It helps nobody. Bitcoin's price history is not a straight line up. It never has been. Bitcoin moves in violent cycles. Huge rises, then massive crashes. This is normal for Bitcoin. Let's go through some historical crashes. In 2013, Bitcoin went from around $1,000 to under $200. That was an 80% crash. In 2017, Bitcoin went from nearly $20,000 down to about $3,000. That was more than an 80% crash. In 2021, Bitcoin peaked near $69,000. Then it crashed to around $15,000. Another 70 to 80% drop. Each time, people said Bitcoin was dead. Each time, it survived. Now let's talk about what is happening right now. We are in 2026. Bitcoin recently fell sharply from its recent highs and dropped below key psychological price levels. This drop wiped out billions of dollars in market value in a very short time. Many traders were using leverage. When prices dropped, their positions were liquidated automatically. That caused even more selling. This is called a liquidation cascade. So why is Bitcoin crashing now? There is no single reason. It is a combination of multiple factors. First, market cycles. Bitcoin historically moves in 4-year cycles linked to its halving events. After major bull runs, corrections happen. Not because Bitcoin failed, but because markets cool down. Second, leverage. Too many traders borrowed money to buy Bitcoin. When prices dropped, forced selling kicked in. This accelerates crashes. Bitcoin doesn't fall slowly. It falls fast. Third, macroeconomic pressure. When global markets are uncertain, investors reduce risk. Bitcoin is considered a high-risk asset, so money flows out quickly during fear. Fourth, confidence shocks. Exchange failures. Security breaches. Regulatory headlines. Even rumors. Bitcoin is still a confidence-driven asset. When confidence cracks, price follows. Now let's be very clear about something important. A Bitcoin crash does not mean Bitcoin has failed. It means volatility is doing what volatility always does. Bitcoin has crashed dozens of times in its history, and yet it is still here. This does not mean Bitcoin is guaranteed to recover. Nothing is guaranteed. It simply means crashes are not new, and fear feels strongest at the bottom. If you are a beginner, here is the most important thing to understand. Bitcoin is not a get-rich-quick machine. It is a volatile asset that rewards patience and punishes emotion. Most people lose money not because Bitcoin is bad, but because they buy when everyone is greedy, and sell when everyone is terrified. This channel does not tell you to buy. This channel does not tell you to sell. We explain how markets behave, so you can make better decisions on your own. That is the entire point of not a financial advisor. So where does Bitcoin go next? Nobody knows. Anyone who claims they know is lying or guessing. What we can say is this: Bitcoin has survived crashes before. It has punished overconfidence before. And it has rewarded long-term thinking before. History does not repeat exactly, but it often rhymes. If you found this explanation helpful, subscribe to the channel and leave a comment answering this question. Do you think Bitcoin volatility is a feature or a flaw? Thank you for watching.